Good morning. Good morning. Options chain. Accept things. All right. So, mostly good news this morning, actually. So I'm really not bothered by this price action at all. We went into like a parabolic mode here, and makes sense to me that we would continue to do the same thing. So we've had these series of like, really what they are is diamonds. I mean, you can see them visually. So when we were messing around last week, we were talking about the possibility that one of these might break back to the upside. And then we're also talking about how you could have like a diamond set up right here that's actually much larger. So I'm not really worried at all about anything we've seen this morning. Just kind of waiting it out, see what happens. Potential for some pretty decent lows if it continues to drop, but I wouldn't suggest it goes much further unless it breaks through maybe this like 455 level. Good morning. Good morning. Yeah, so we've had a series of these diamond shapes. I don't usually see it that often, so I think it's important to kind of just note it. That's kind of been like this motif here that we keep seeing like repeated. And yeah, so they're using these up thrusts to help drive the price lower. And I mentioned not yesterday, maybe Friday or Thursday, that this could be one right here. It's possible. I said it could be one, but it was also possible, totally possible, that this is part of a much larger diamond structure, which happens sometimes. So like sometimes you get the diamond on the left and the diamond on the right of a much larger diamond structure. And it kind of makes sense if you know the way the diamond structures break. They typically break about the height of the diamond from wherever that center mark is. It's not always the center, but it's just the breakout level. So you're talking about on this one, it would be kind of hard to see where that should break, but it seemed to break to the upside. I didn't have a really great feeling about that because even if it continued to go up, which it didn't, I mean, it didn't go all that high, didn't go over 481. Even if it had continued, it would have only went to like 483 just on the principle of that breakout alone. Now, on the overall picture here, there probably is something else going on with a widening, is what it looks like to me. So it looks like there's a bit of a widening spread going down here. And so I think they didn't want to go any higher on account of that widening. So it's kind of like a dual pattern, I guess, where if the diamond had continued to break as it normally does and give you that target, you would have breached the top of that widening and it would have broken out. And I don't think they wanted to do that on a Friday, which is not a very normal move. So in looking at this, it might be a bit discouraging, but I think the overall picture should be one of just it's pretty normal, the price action here, because they didn't breach that top. So that diamond, it either is like a head fake, right, where it's going to kind of reverse and then it's just going to continue down lower. We can do a target for that, or it's a build out for a much larger one, which is something that, I don't know. I'm not saying it has to happen, but it's pretty typical in this market. So that would get us down to like 450. So last week we had talked about coming down to like 450 as a possibility. Like, well, maybe that's where they want it because of a Friday action. It could be max pain. And it measured out that way. So if you had an up thrust and then a downward move, potentially you could measure out to about 450. Now, does that mean it has to go down there right now and all that stuff? I don't know. I don't know if it's going to break that low either, because there's kind of a dual pattern here. Like, one is a creek that's kind of pressing downward and it's clearly widening. I mean, whether or not it's obvious, I don't know. To me, it doesn't really matter. Like, a widening is a widening spread. So when you look at that, it's like, yeah, this is going down and it's pushing up higher. So it's creating like a strange kind of arcing version, I guess you could say, of kind of a wedge, but it's definitely there. I wouldn't call it a straight line widening, but whatever. So a widening spread, what does that mean? It means that as you're traveling along, one side, usually the opposing side, is gaining steam. So if you're heading down, a widening spread would have to be that the bulls are kind of gaining steam and they're pushing the spread, meaning they're pushing the distance traveled farther, right? And usually that's an attempt to reverse the stock. And then the same thing applies if it's going up, except of course it's bears, and those guys are going opposing as well. So if it's widening as it's going upward, it means that there's more and more selling pressure as it's rising. Usually that coincides with some kind of shift in volume. When we are seeing a shift in volume, we've seen definitely an increase in volume as it's going down. So on the whole, I do feel like this is pretty bullish, this kind of widening that's going down. But on the kind of the short term, I don't necessarily think we're safe from 450. So it's pretty close to this other line, which is like a cross, which is more of a creek cross, in my opinion. I'm not sure if we're going to hold that. But at this point, that 450 still looks pretty attractive in terms of like a target. So we'll see. Anything less than 450 is fine. And this morning we got is positive. We got 457. So not like, really not that concerned, Like, this is all pretty straightforward. We've been talking about this as a distributive top, and the whole point of that would be to come down back low. Like, we wouldn't have any reason to come back down here if we didn't either get an LPS or a spring right here. So it should not surprise anybody that we tested the floor and then pushed up and then drove beneath it. I think what's frustrating is when you see that Friday price action, and I'm not a big fan of it, so I don't usually particularly like enjoy it. But that last minute kind of bigger up thrust, people are like, oh, it's going to keep going, it's going to gap up and this and this. It's like, well, it was a very rounded bottom with this massive spike at the end of the day. That typically doesn't go very well for us. So, and you might be looking at that volume thinking, man, I don't get it though. That's huge volume. And you're not wrong. That volume is very, very significant in the grand scheme of things. So don't completely put it out of mind and think that that doesn't matter. It's not that it doesn't matter. It does matter. But what matters more is, at this point, seeing the spring area finish successfully. And that means that you got to eventually come back above 460. I'm going to say the floor is 465, which is where we are right now. But I'm not thinking we're going to jump it right this second. We'll see. But I think, yeah, 465 is the big deal. So, yeah, I'm not going to ignore it, Robbie. I'm going to get there. Um, it's kind of the same deal. It's in a place of relative weakness, except that the volume looks ridiculous strong. At least in this low it does. I don't know if on the big picture that volume is really. It's not insignificant. It's pretty big. Yeah, it's pretty big. Pretty big buy-in. But like the last time we had a big buy-in like this was going into this top over here, which was right before earnings, September 6th. We took off, and it's like you think that that volume is going to protect you from something else, and in reality, it's not like that. Like if you have a high volume and it turns into a top, then what you've really experienced is a lot of volume where there's tons of sellers, right? And so that volume is increased because there's been a lot of trading happening, and really it's an effort. Unfortunately, it's like you're saying there's a lot of effort into a very little move. So you really don't want to see a high volume top. That just indicates there's a huge amount of selling. But it's green volume. Yeah, it takes a penny to make the candle green and then make the volume bar green. If it helps, like change your volume to being one color, and then you won't have to ask those questions, because a lot of times people look at that and they think, well, it's all buying, it's all buying, it's all buying. It's like, well, it could be if this has a backup and holds that this was indeed a buy-in. But if this ends up ending into a distributive top, then you really have to look back at this and say, what was really going on here? And it's just like a huge amount of volume for just a small move in the grand scheme of things. That means there's like a huge amount of buyers and sellers present, right? If it's not moving very far. So just keep that in mind. Like, could it be a big buy-in? Sure. Could it be something else? Yeah. So I'm not going to go any further talking about that. I just wanted to briefly mention that, like, I think there's going to always be that question in the back of your head, like, well, why is the volume so high? Why is it so high then? I don't think it's a negative thing. I think it's positive that the volume is very, very high here, but on the whole, but it doesn't mean that this couldn't be a distribution. So if it's an S curve, and I'm kind of, like I said, I'm kind of doubtful of that, because I'm on the 30-minute here. It's been overbought for a while. And lately, GME has not been overbought very long on the 30-minute without having some serious curbs back to the downside. So it either has to have like a retracement back to about 50 on the RSI, and then it can continue, which is sort of what happened back here in May, and also again in July, or it's probably topping off. So on the whole, there's not really any reason to speculate too hard about that, except for maybe looking at like a larger time frame. So GME on the 4-hour has quite a bit of leg room, and it hasn't really been overbought in a long time. So the last time it was decently overbought was back here on September 9th, and it didn't even breach 70 points. So it's not really like a difficult equation here, right? If you can approach this particular creek coming down around 2310, and you can do that with quite a bit of room to go on like the 4-hour, for example, you should be in a good position to potentially see a nice leg up after that. But like I said, just kind of in general, like looking at this, I don't really know if that's going to be, and maybe 1 hour would be a good one to judge because it's closer to the 30-minute. Yeah, so 1 hour is also overbought. So yeah, I mean, there's a couple ways you can measure it. One would be like an S curve, which is basically like we're in the middle of it right now. So you would look at the high that was made, which is roughly around 23, let's just say 2340, and then the low, which is like 23, maybe 26 or something. So that push up and then the pull back here. And somewhere between those is going to be, so you could pick one or the other, but I'm just going to pick the low here. And yeah, that makes sense. It's basically like a potential S curve back up to 2310. So it's a 50-50 marker. And then we've already got a resistance on hand that we were using. and that resistance is like a 50% marker on this whole drop here, potential drop here, I should say, because it doesn't actually go to this low. But it marks off at like 2160. We've talked about 2160 a lot because it's a very important level. I've had it on my chart for a while. 2160, 2165, whatever. Doesn't make a huge difference. I think it's more like 2160 though. Well, nah, 2165. Not sure why I said 2160. 2165 is pretty good. So that's kind of a midway point between the bottom and then 2310. And so if you're looking at this as like, could it continue? Yeah, it could. And then I think that you just have to kind of watch it. If it makes a lower low at this point, it's probably breaking down. So we're looking at a pretty tight structure right here. Actually, it already looks like it may have broken. So hold on. I'm going to go to a slightly smaller time frame. Kind of dancing with the devil here. All right, it's real close. So it's right on that mark. Yeah, it's in a tight spot right now. So essentially, like coming back up above 2188 could yield the big run. So if you kind of pushed up here and found support, I think you'd go ahead and make the remainder of the leg. But I got to be straightforward. It looks like it pushed above here and did a double top, and now it's dropping beneath this rising resistance. Call it a creek if you want. This is kind of like already existed for a little while, and I would venture that it looks, and it's divergent here quite a bit on 15 minute. It still looks kind of weak. So like I said last week, even going up here, and it's not me trying to like toot my own horn when I say this. I'm just repeating what I already said. And I feel like that's important when I'm trying to reiterate something that should be at this point like a normalcy. Like if you were here last week, then you would be looking at this thinking, okay, this is already what we talked about. Does that make sense? And that's good because you don't want to come into the week and think, oh no, it's dropping. This is completely different. No, it's not. Like we talked about the possibility, I have it on my chart still, that this could have pumped up and then redistributed. I couldn't have said it more times than I did. I mean, I actually thought it might happen before FOMC and then come back down after, but it's not like it has to come super low, but it definitely looked like something that could potentially reject here. So the creek, as I see it, is at $20.15. And then if it drops that, it's probably going to come pretty low. Yeah, I think then we're looking at, I hate to say it, but we're looking at a bit of a slog here. Maybe 1850. So if it holds, it can hold at 20. I mean, it could hold at 2070, but I think it would be more likely to hold at 2015 here. And if it didn't hold that on a pullback, I said 2025, that's not right. Then I think probably going to head all the way back down to, I just don't see why not. I think you're going to breach the recent bottom for sure. So you're going to go below 19, somewhere between probably, yeah, I mean, this is pretty close to what we had said last week, 1863 to 18. So we're looking at sub 1936. Why? Because we jumped a giant creek here and didn't check it on the way out, you know? This is pretty typical when you're looking at this thing. This is what I was kind of warning about last week was the was this bounce here with this like massive push up that kind of double up thrusted back to 2470, boom, boom. And you see a very similar kind of move happening right here with the bounce and then that run up. So my concern is it's going to drop it and probably try to coast slightly below here. So again, maybe right below 1936. It may even do the same thing again. It just depends. If it makes another move, hang on. This might end up forming some kind of weird like wedge type action. Yeah, it wouldn't surprise me to see it, because what's happening is it's going back. These are like big back tests. You see that bounce? That bounce comes up and checks 2310. Then it dives low for liquidity, and then it rockets up and pushes to the next resistance, which is at 2470. Now this does the same thing. It drops all the way back below the resistance that was, the support that was checked on the previous iteration here. And it trades that low area. So basically what happened here is they got sellers, tested and said, do we want to come back and trade? Are there still shares to trade at 2050? Yes, there's still shares to trade at 2050. So you push all the way up, we got to go check this resistance. We know where we can get sellers. We're going to go all the way back up to 2470. That's the big middle level. They push all the way back up, rally to 2470. Then they dump it all the way back down to sub 2050. This level was previously tested back here anyways on August 5th. So all of this stuff has been dipped in multiple times. And they're using this kind of upward momentum, right, to go to these higher levels and then find sellers. And there's plenty of them, I guess, because they're dumping it pretty far. Granted, a lot of this stuff did happen on this move down in, after hours. So grain of salt with that. I think that's somewhat, I don't want to say cheating, but kind of, because you're not really engaging the whole market. You're kind of just doing what you want to do and then holding it. But nevertheless, you have a very similar kind of bounce out. This time it went up to check what? 2070. Okay, 2050 to 2070. Then it drives back low. It goes back down to test kind of near where that initial test was right here. It's the same, very similar, because this is on a rise and this is on a rise. And it comes back down to like 1950 again. And then it pushes up and it goes to, again, like a higher support and resistance level, which was at like 2065 basically. And so the thought there would be that perhaps you're doing some kind of a whip around, and I don't want to make it too scientific here, because it could be less mechanical than that, meaning that like there's a challenge in sort of trying to determine exactly where those middles are, I guess. But I would say that this looks to me like the creek right here. So it looks like what happened is they roughly did like a 50-50 drop around the creek. And we're seeing something really similar right now in terms of the setup. So again, like, it doesn't have to break. That's not like a thing where it's like, oh, just because it did it before, it has to do it again. But from an iterative standpoint, it's very, very similar, right? So you have a super similar move potentially here that 50-50 is around the next creek. So you would look at this and say, well, where would it go? It's like, well, to me, it looks like it's going to where this was kind of going in the end anyways, which is about 1850. So is there anything super important about 1850? No, except that it's slightly below that August 5th bottom, which is positive in some ways. That would be a liquidity test, aka potentially a spring. It does not have to go any lower than that. Like when we go back and we look at this there's a distance between 1770 and roughly 1830, and that was my estimation for where we would land. But in reality, that's not quite right. I don't know why I said 1830 originally. There probably is a good reason for it, but it really only has to go slightly below 1873. So you really have $1. 1873. So if it went down to 1850, that's technically a spring. You know what I mean? So I think that could be pretty straightforward. So we're talking about 1770 to 1873. So that's that. So yeah, if it got down to 1850 here, then we'd be in really good shape to shoot. It doesn't even have to come that low. I've got this at 1850, which I think is likely. So I'm going to say, yeah, I'm going to narrow it down a bit. I'm going to say between, 1850. I think this is the likely area it hits. And 1873. Again, if there's a spring. Well, what if there's not a spring, Booksy? Well, I don't think it's that complex, Like, we talked about it a minute ago. There's a possibility this is like a gigantic, I want to say a head fake, but it's like a topping action that wouldn't necessarily advance any further. We're probably retesting this creek too. Now that I look at it, it's kind of like confusing, but I'm sure it's there. And I feel like at this point, it seems pretty self-explanatory. Like if you continue to make higher highs here and you push up, you get the breakouts while holding above 22, you should see 2310. Or I would say it's very likely you see 2310. You could go back up and fill that gap, by the way, without breaking. At this point, you could go fill that gap without breaking the highest creek, which means you don't have a real confirmation of advancement. They did position it close, so it looks like it's right about the same spot as 2310, but it's pretty darn close to that creek. You can see it easier on the left side here. Basically, if this pushes up to the top, it could fill that gap without actually breaching the wall. So even in the move up, there's a possibility it still doesn't continue. But I'm thinking it just looks overheated, so yeah. So anywho, we'll see. How could, AMC already have its spring and GME not have its spring? Shouldn't they both be done at the same time? Blah, 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 blah. I don't know. GME's had a lot of massive swings up and down. And those levels have been wildly different than AMC in terms of like dollar value. So even if it looks like it can't happen, I would not write it off just because, I don't think it could travel all the way back down there with AMC not dumping. No. That's not really the case. AMC's had very, I guess you could say, mild swings compared to GME, and it's been largely surrounding this $5 region. So very little has changed here on AMC in the last few months, whereas in GME it's been really dramatic changes. Both of them, oddly, still have been hitting those middle levels when they need to, which is kind of strange. So GME has been traveling a lot farther to do that. Frankly, in a lot of ways, it's been a much better trade as a result. You're getting like 25% moves, whereas AMC is getting like 2 or 3% moves, But yeah, don't just look at the one and think, it can't happen, because then where would AMC be? That's not the right way to look at it, I don't think. I think that's a weird way to look at it. I would just focus mostly on, like I said, focus mostly on the targets as they appear, in each. What's the LOL about? You said 420 LOL. Yeah, I mean, maybe if there's I think the 425 is very likely the lowest you could go here without breaking through the creek. So we'll see. But ultimately, it's kind of like GME. You don't technically have to go any farther than what happened on the 5th. So in that situation, you don't really have to go any farther than 440. If that makes sense. So I think there's this idea that like a spring has to go to certain levels and this and this. It may be the case that you sometimes can measure that out, and I think we have a decent enough measurement right now to suggest that like, yeah, I think on the big picture it looks pretty straightforward right here. Like, there's definitely a possibility it could come as low as like 420s, but sub 430, which is kind of a bummer. But again, in reality, it does not have to come below, significantly below 441. It just doesn't. So we can estimate, I think it has to go below 430, or I think it has to do this, or I think it has to do that, or I think it's going to go sub $4. We've talked about that before. So my whole spiel about that, and it's frustrating because when you look at the big picture, it's hard to make an argument that sub $4 would be needed, or like sub even like 430 would be needed. It really is, because in reality, like, there's no, just in, again, looking at this big picture, it's like, yeah, I mean, it could happen, but it just doesn't really make a lot of sense. And I get to the point where I'm starting to justify things beyond what makes sense, and that's not a good place to be. So, the justification for that perhaps is that, we're going to go dip low first, here, and then springboard off and this and that. Yeah, but at the same time, how we read this range is very important in terms of like auto reactions and things like that. And if this is an early auto reaction with a immediate low and then a phase B top, then yeah, you would expect to come below maybe 435 or something, but it almost doesn't make sense as that, because there's like a lack of continuity, I suppose, in reading the range that way. And I've argued a little bit about it here and there with myself, even like thinking that this 410 that we hit early on really is a selling climax before the real auto reaction, which is this big volume move up here in June. I think that's a more appropriate auto reaction. And if that's the case, then, our phase B top doesn't come higher, but that's kind of your range setup. And then you just kind of build out from there. So the phase B bottom should be 440. Well, what's the difference between the two? This doesn't seem significantly different. Well, it is significantly different, because in one case, you're reading that that reaction down after the phase B top potentially as a, or after the auto reaction as a bullish auto reaction. And the other, it's like a bearish. So it's like, well, if the auto reaction happened and then immediately goes and makes a new low, that could be kind of bearish. If the auto reaction happens and then it holds support higher, makes a higher high, usually that's typically at least a decent bullish setup. It doesn't have to stay that way. You could still make a sign of weakness or something, but just go look at Wyckoff schematics for distribution versus accumulation, and you'll see what I'm talking about. So a lot of it does depend, I think, on maybe your perception of this early build out. And AMC does have a tendency to do early auto reactions that are don't want to say they're bearish, but it does have that tendency to kind of make an auto reaction and then come make a new low. And unfortunately, AMC has largely been a bearish stock. It's down 90%, right, in the last few years. So it would be silly to kind of suggest that that's not possible. You know what I mean? It's not possible that was a sign of weakness. I don't think, and I've been talking about this for a while, I don't think that it is bearish, but, you have to prove it. I mean, at the end of the day, we can be right about 100% or 99% of the things. You're wrong about the last move, because it does something you don't expect, or there's a change of character, and you're left kind of holding the bag, like, well, what happened, So what's the last move is still this bigger creek jump, and that hasn't happened yet. So we can kind of debate and stress about maybe how low it could go on a spring, but I think that it boils down to whether or not you think the bottom is, this 433 level, or you think the bottom is 441. And I think the bottom's 441. I do. So I think that if we were going to make a dip again, that 441 would be the preferable place to do that. And I think that going below 430, this is where I'm having some trouble. Like, I don't think it's impossible. I just don't know why, in the grand scheme of things, like, why would you want to go back below that number, unless you're going to try to, I guess it would be effective at scaring me, so there's that. But it definitely would be probably like the lowest I could consider us going without potentially breaking down. So, yeah. You can see it visually. I'm looking at this big picture chart right here, and I'm like, yeah, there's definitely like a visual floor right around that 430 level. And we've already tested it 3 times, 4 if you count this dip to 440. That whole range from 430 to 440 has been checked quite a bit. So that's why I think that to me makes more sense as the spring level. But I'd already argued that last week that I thought 465 was a better floor. And I do. I think it's a stronger spring bottom. Like, if you were going to flush it, fine, flush it, set it up big, flush it down, and then return back above 465. I don't think it makes a lot of sense to think about, I guess, doing that whole setup above 441, except for maybe liquidity purposes. It doesn't really make a lot of sense to me to do that. Maybe to go back and trade this level right above it, like at 450, because it wasn't traded very much. But this is a stronger support. Like, we've had 465 as a much stronger support more often. So it would make a lot more sense to me. You guys are like, why is that important? Because when you spring off of like a diving board, off the surface. You have to have the floor. If you don't have an established floor, the spring doesn't make any sense. And usually that floor, think about it like from both sides. From a bear side, that floor, you want to be able to flush it through there and get sellers enlisted, right? Where would sellers be most likely to start selling? Well, I think 465 is a good one because it's been largely a support. So that would be a really strong place to try to enlist sellers and see what happens. But then also from the bull side, once you return back, where are you going to find buyers picking it up again and holding it? 465. I don't really see 440 as that kind of support right now. It just doesn't really seem that way. Like, we've hit it twice. I'll give you that 440 area, maybe 3 times if you count this first drop, but it's just not like, there's no like platform there. It's been dipping down to it. So if we were to drop down, I'm just saying it just so I could say it out loud and like kind of walk through it with you. If we were to drop down to 440, I don't think it would make a lot of sense to go down there unless we establish like another iteration. And I was talking about that before. Like maybe there's a whole bunch of chop down here before a bigger drop. I kind of have the drop first, but definitely could be one of those situations like this where it's like, oh, it goes up and then comes back down again. You know what I mean? Because it's like, why would you go down there if you don't have a floor to trade off of? I don't know. And the other thing I can think about is like a terminal action, like a quick dip down and then rip back to the upside. So I still think 465 is the better support. So yeah, that's that. It's kind of an internal debate I've been having because I'm looking at the range like, well, I definitely thought it was bullish the whole time. Why am I now questioning it? It's not because we're going down. It's because of the nature of like establishing where that bottom really is and should be. And for a lot of people, it was like, well, we're going to go down to low fours. And I was saying, no, I didn't agree with that because I just don't think it's the strongest floor. It doesn't make any sense to go down there and just tap it and leave this time. We've already done that multiple times, dipped into the water. It only really makes sense if the plan is to go down here and trade low for a while. So yeah, so my preferable spring floor right now is still 465. That's just what you want to have happen though. Yeah. Yeah, what happened to WTO? What happened is it dropped below 58 cents on Friday. So unfortunately, it didn't really happen till like near the end of the day. And someone had asked me about it in the Discord, and I said, it's hard to say because it was a really late in the day price action shift. But yeah, I mean, it clearly went high and then came back down and it broke that support. So when it dropped 58 cents, and 58 cents was the level it needed to hold here in order to continue, it needed to hold right here and then push back up. When it dropped 58 cents, I don't want to say the writing was on the wall, but it kind of was that you could have a potential drop Monday. So what I did is I drew a creek coming down, a localized creek coming down so you could see it visually. And it's sort of a double check because we jumped over this this falling wedge here, this red resistance line. You see that? We hopped over that, and then this is like a double test on resistances, and it just happens to be a throwback as well, and more than a throwback at this point because it's already come back down below where it started. So maybe a bit unfortunate, but now it's at a point where it's like, well, I mean, if it's going to keep distributing, it's not impossible. We'd have to kind of take a look and see where it could go, but I would argue that this is probably just a widening, and so from this point forward, we're just looking at it coming maybe back down to the floor again at 50 cents, and then we'll see. And I know that's kind of a bummer because some of y'all are like, well, I bought it 50 cents. I don't want it to come back down there. I get it. I do. It's frustrating. But this is the nature of the market, right? If you don't hold the supports and there's no buying power, you're not going to just like take off for no reason. You need to have the support. I talk about breakouts all the time, and I always say breakout with support. With support. Like it's super, super, super important. Super basic understanding of the market, but it is very, very, very important. So I didn't see any real signs that was necessarily going to happen. But it did go very, very high off 53 cents. And then it did not break out of this channel down. And I think I did this off stream, so I probably haven't shown you this yet. But I did like a fib channel on here just to kind of look at this and see if I could determine. And it may be a little difficult to see. Let me see if I can bump up the brightness on the... actually, that's already up quite a bit. Let's make it a little bit of a lighter gray. A little more contrast, I guess. I don't know. So I did a fib channel coming down, and I set it up to where the top of that channel is actually at 250, which is interesting because it's kind of the target that I had in mind, maybe longer term. Um, and you might be looking at this like, well, I don't see how you possibly made that because it doesn't make any sense. It has to do with that middle line. So that middle line right here was the S-curve line. And we had been messing with that for quite a bit. Now you probably can't see it super well on this chart, but the S-curve is right here. And the middle line that drove through them was what I thought was going to be like the reaction line and where you're more likely going to go back to. Now, we had early S-curves that drove back to, let's say, 88 cents. And then we had previous ones that drove up to, or no, that went up to like $1. And then we had later ones that drove up to a lower price. In this case, it's like 85 cents or something like that. Okay. Those particular movements were defined by this cross trend here, this wave down and then back up. And when you get to that top again, then I wouldn't say it's completely done, but at least that particular wave would be thought of as finished. When I looked at that midline and how steep it was, I took it and tracked it back through, and I noted that, yeah, it definitely looks like it's sort of a bang that all the way through. And then I did a, meaning like I took parallels of it and just brought it up and down. And then I took a fib channel and drew it out here so that you could see it. Okay. So right now, still thinking 50 cents, probably going to act as a floor. And then we'll see if we can get a bigger reaction back to the upside to near 86 cents. And same breakout levels. Could it go lower now that it's pushed up higher here? Sure. You know, if it breaks below 50 cents, you're looking at like 47. But I can't really tell you like what else that would look like right now. I hate the idea of a 50-50 flush here because I think it would go really low, like 43. I don't have any targets down there per se, except for maybe the steepest possible trends like right here. So if that's the goal, to like really dump it down, we're going to see it slump pretty far. And I got to be honest, at that point, not really sure what to make of this trade, you know, because it's not reacting in a timely manner. So I personally would be rethinking it if it drops below 50 cents, you know, significantly. So I'm going to set an alert on it. It's not all bad. I know it seems that way, but really, like, in a lot of ways, this could be thought of as like an inverted head and shoulders setup as well. And I was thinking about that, but I didn't want to like go too far on it. Again, it didn't hold, if you flip the chart upside down, it didn't hold that level here. And so it still looks like it's just kind of rising, you know, as if it could go flush even further. I think bears are just really taking their time with this one. I think they're really trying to push it and advance it. And yeah, they're covering positions and stuff, basically. This level that we bounced off right here is very important. That 66 cent level is pretty significant. So you should mark that one too. So I think it's just going to go back and test the floor, basically. So this is just a range build out. But I would say that it's possible there's sort of a head and shoulder, a rising head and shoulder setup here as well. And in that case, you know, you look at the big picture, it's like, sure, if this breaks back down again after this widening kind of broke out, you could see it slump on the inverse, right, really far. And that makes sense to me. That would be like the big move. So I still think the setup's okay. I just wouldn't want to see it come significantly below 50 cents. MPW, not much to say here. Nothing just too crazy yet. You know, starting to form out that kind of middle mode. You guys are like, what are you talking about? So there's a divergence on 15-minute. This is coming down, and the RSI is coming up. That does suggest to me that there could be a bit of a wave back to the upside, imminent. So I'll be watching closely a break of this trend right here, maybe around 590, maybe around 592. So I think you push over 592, potentially you could see it come back up again. And honestly, it could come all the way back up to the top. There's a couple levels here that I'd probably look at. I'm going to go back to big picture on MPW really fast. Let me check something. I need to see what other levels are right there. There's not much from this top previous. I mean, I would say $6 even, but that's kind of a given. Nothing. Yeah, it's like kind of a reminder of something like this. You see, like way back in March through May, every time it pushed down away from that middle line, it kind of reacted back up. It did this like multiple times, and I wouldn't surprise me if we're seeing something similar. Sorry, Stevie. I don't put those ads on the front of the stream, so don't know what to tell you. YouTube does that automatically, so yeah, so those slumps down, I think they're changing things too, by the way. Is they keep asking me like for whatever reason like different preferences. They like keep asking me preferences on ads and junk. Every now and then they upgrade their stuff. So if something new happens that didn't happen to you before, it may very well be that something's changed, you know. Does that make sense? It's not like I'm changing something. It literally could be that AMC has. Yeah, like the AMC, that YouTube has altered something. They did that a while back. They added an automator function where you could like automate ads, and I turned it off because I didn't want them to automatically insert ads while I'm streaming. That's what they were trying to do. And I'm like, no, I don't. Why would anyone want that? I don't know. It's odd to me. You know what I mean? How would you know when people are listening to you or not? It's super strange. So I turned it off, so I don't ever insert ads. There's a button you can click, but when you click on the video, like I can't control the number of ads and junk that you see. I just can't do that. There's nothing I can do about that. So if they changed it, they changed it, and they take their share of revenue from ads. So I mean, for them, it's like payday. They benefit from showing you more ads. So anywho, MPW here, looking at that. Yeah, we're kind of just breaking off of that level and pushing away. And we're doing it with like a mild divergence. I wouldn't call it anything like too crazy. So I'm just trying to like identify levels that it's come back to before on the big picture. Yeah, I don't know. Like I said, I don't control that, so I have no idea. Maybe they're bumping it up, seeing how people respond. Every now and then I get surveys. I try to always answer honestly. Like, hey, I don't like this or I don't like that. But again, I can't control that. I have zero input on how many ads or how long they are. The only thing I can control is whether ads appear during the video, and I always try to say no to that. I think that's only happened once where someone got an ad during the video, and I have no idea why because I had it off. So yeah, I'm not a big fan of them either. So I always try to think about like, would I want to watch an ad here? No. Yeah, so maybe 640. So like if this were to come back up again and break out, I think you could get pretty close to this gap fill at 624, maybe go as high as 640. This zone right here, perhaps. Okay, if it doesn't, I'm thinking this is just like a middle S curve. So instead of it being like a shallow S curve, it's kind of just the middle of it'd still be like a shallow S curve. And then it basically is still exactly like what I painted here a long time ago, which is this breakdown that bounces out, comes low. Because I don't know where else you would go at this point than like 550 or 561. That's where that gap is anyways, 561. So it's pretty straightforward. So if you're playing MPW, I would say that that's just a trajectory. That doesn't matter. I was looking at this orange line trying to see what it is. Yeah, maybe 637. It basically would potentially come up and chop around this gap zone at 620. In the light of that, you might say, well, is that then bullish or bearish? I don't know yet. We'd have to wait and see. It could just be like a strong auto reaction of sorts, auto reaccumulation. It could be that this is like a double top. We'd have to wait. I don't know yet. I don't know. So far, so good. I mean, if it didn't come back down to 461, it did come back down to what? 461. I'm at 561. It did come back down to 569. I don't think that that's significantly off the mark. It didn't fill the gap, so there's that. But, as like I said, this could easily be like a topping action, and then you could come down lower later. In which case, this slump may be designed to give you that move. So if you come out and then back down, that would make sense. Like a wave up and wave back down. Of course, creek itself would be really low, so I don't know about that either. I don't like that. Like I said, we'll see. If it doesn't come quite as high, maybe it just barely gets to that gap. It may actually be better because I get the feeling it's going to try to reach up to 635, but it would almost be better if it didn't, because then we might be able to get back down here post haste, come back down. $550. I don't know. That doesn't really look bullish to me. If it's a big like ABC correction, maybe it won't matter. It's like a zigzag, like a flag. Yep, still leaning down towards the 440s. Not there yet. Watching carefully this 465 level to see if we can find some. That 440 level is, in my opinion, like probably where the spring happens. If it drops significantly lower than 460s, you're probably looking at sub 440. But a spring is a spring is a spring. Like you can have like a sort of a maximum spring level, but there's not really a minimum spring level, meaning it could be like a penny below the floor and technically it's a spring. So that happens sometimes. Sometimes it's just a slight dip. I mean, it really is. And then it just goes and you're like, okay, I guess that was it, maximum spring levels usually once you get to kind of a point of no return where you basically enter a new range. And I usually think about it 50% through the previous range. That's why I've been really hesitant about dropping below 425 to 430, is I think that that's like halfway through the previous range. I don't want to do that. I don't want to be in a place where you're basically in a new range. That's not what you want. So, for a spring. So yeah, basically there's a good chance here based on the divergence that we're seeing on the short term. It's not long-term divergence. In the short term here, there's a decent chance that this could get a break back out and on MPW and go back to the gap fill or up to 650. So yeah, basically 620 to 650, and then probably come back down, wave back down to 550s. That's my guess. Educated maybe, but it's a guess because there's other things that could happen here that would maybe surprise me a bit. Actually, at this point, it would make almost more sense to go ahead and go back up, even though I've got this drawn like downward. That would actually be surprising to me now, because there seems to be more buying pressure than expected. Perhaps, yeah. Even on 30 minutes turned up, so maybe a decent swing to the upside any minute. Could just be a bear flag on the RSI, but I think it's unusual to have a 15 and 30 minute divergence and not act on it. Would be kind of strange. So they'd have to squash it somehow. This doesn't seem likely at the moment. Yeah, I'm not particularly concerned about AMC and GME at the moment. Like, not really worried, about the trades. Probably the biggest loser today has been WTO. And I haven't checked. Yeah, it's like pushing down towards 50 cent. It's that 58 cent level. It really rocked it. It should have, I don't say it should have held, but if it had held there, it would have been a lot stronger. Just going to check IWM real quick. The Russell 2K. So the Russell 2K represents your small caps. I wouldn't say it represents largely mid caps at all. You can look at like the S&P 400 for that if you haven't. It could be more of your mid caps. Don't include like the highest earners. Yeah. Yeah, looks about right. Okay. Well, this is what I thought maybe would happen last week. Is it would come down to 217, which seems to be the creek area. Maybe bounce out and then head low again. So it's weird because the small caps definitely have the most to gain from rate cuts. Like, absolutely they do. There's no question about that in my mind. So why are they so heavy with selling? I think a lot of it is just repositioning, and also like profit takers from, and just in general from like this whole run up, which has been pretty significant. I mean, you look at this over the course of the year, it's up like 17% or something. I don't even know. I'd have to go look at the number again, but it's up quite a bit, Let's see. January starts right here. I want to say it's like, all right. Yeah, I'm 12%, 10%. That's quite a bit for small caps just over the course of the year. 10% might not seem a lot because you're like, well, the S&P was up like 20-something% or whatever. Yeah, but it's still playing catch up, right? So at the end of this year, it may be much higher. But right now, it's already had quite a bit of a rally this year. Even if it doesn't feel like that because of these massive swings, it's still up. The direction has still been up. And it's been doing a lot of climbing out of this old range that it was in for over a year and a half, 18 months or whatever it was. So this build out has been slow, but it's definitely getting there. So, in the grand scheme of things, the waves here should not be thought of as like overly negative, like in a negative light. I know I've got a lot of junk on here. Let me just simplify it. I mean, it is possible it goes down pretty low, and we'll keep that in mind, but I want to just kind of keep it really basic for a second and just take a look at this and just tell me what you visually see. Because like I see it, I think you guys see it too. To me, it looks like an M cross. Like that's what it looks like. And in the grand scheme of things, it's like, well, how low could it go? You know, if it's an M cross, it can go pretty low. Again, like, do I think it necessarily takes this long? I don't know. You know, but if I were just looking at this big picture and saying like, well, where could it go? This to me looks like kind of what we just saw in MPW. You've got the big push. Now you're climbing, and if it can hold the climb here, and it could have a spring, you know, I'm not saying it couldn't. Technically, a range like this could be an auto reaction phase B top with a spring. But if it can hold that jump on that creek, it should just go back up, you know, towards the top. And I'm going to bold that so you can see it. So this is important because as a wave goes, this would be my expectation if it can hold this jump that was made. It just would. It doesn't have to be any more complicated than that. Pretty straightforward. Now, if it doesn't hold that, this is where you get into maybe that idea of, let's call it a Wyckoff range. Okay? Because if it doesn't hold that creek, it's almost self-explanatory. It starts looking like, okay, this is a breakdown here, right? And this is, again, as straightforward as it needs to be. Then you've got essentially a need for a phase B bottom. Could be anywhere, but I would imagine it would be at the gap. That's just the most natural place for it. Then you'd have some kind of a widening here of the creek. You'd have some kind of reaction move, right? This would also be like a retest of probably this cross, and then also a retest of that rising ice, we call it, that rising trend. And then you'd go down low for like a spring. Now you might say, well, that doesn't match what you've got here, you know, this potential high in early October. No, I mean, it doesn't, but that's the nature of the market, you know. It's like this S-curve may not finish, just may not. I mean, I don't know for a fact that it has to. That's just me being speculative and saying, yeah, I think it could, doesn't mean that it will. So in the grand scheme of things, looking back at this, when we take a look at this big picture, it's like, sure, like this looks like a massive wave up and then a jump over, you know. It's a little sloppy, but you get the idea. So even in the grand scheme of this, like, I don't really like the idea of coming back down to 0% on the year, but that's been at like 200, and we've been doing that repeatedly. We erased like the entire year's gains on that one drop. I mean, it's just brutal, you know. I don't like the idea of doing that repeatedly, but certainly, like, is it possible that that happens over the course of a year? Yeah. And then you could have a spring action. Again, that August 5th date. This obviously looks really slow. Go down to 195 or something. And this is what I was talking about, like big picture. Yeah, it would look bad. But then potentially you get that creek jump. Maybe this is elections. I don't know. Or after elections, and then you rock it later in the year. Right? Big Santa rally like no other. This should go back all the way to the top. Again, simple path, S-curve, finish, jump the creek, holds it. Maybe more complicated, but it's definitely not necessarily bad. It's just long-term would take a while. Is this lower path, right? And that's basically the way it would wave down. So right now we've made the advancement. That's not the question. We definitely made the advancement high. The question is, do we hold this low or this creek jump? I think it's going to come down to like this 212 to 214 area. And I had talked about this a little bit before because there's a bit of a wedge here, but they broke that, so that's gone. At this point now, I'd be like breaking back through it. So it's a different story now. So originally I talked about maybe coming back down to 208 in a healthier way. And I don't think that that's as likely now unless you stay on top of this creek. You could potentially get down there way late in the game, maybe down in October, early October, you know. So, number of ways these things could happen, but basic picture here is still one of relative positivity, you know, but I would say that it's been a very volatile year for small caps, as it should be. Fear of recession would be biggest scare for small caps. A lot of them wouldn't survive a recession, you know what I mean? Those companies. So they're the first on the chopping block. And then you've got the promise of rate cuts and a softer landing. Slow rate cuts over time, when that has happened, and the last time they did really dramatic rate cuts was in 2008, the 2007, 2008 financial crisis, with the mortgages and stuff. That was when they last did like a really severe rate cut really quickly, and that did cause the market to tank like crazy. This is a little different. Anytime there's been like a progressive rate cutting that's avoided a recession, it's been very positive the year following, meaning the 12 months from when it starts for that small cap group. So more and more data I look at, and more that's supported. I've not really found any evidence otherwise. So in that case, take it for what you want. You know, we've got a couple months here till elections. It's not exactly a bad thing if this goes back down and just 100% checks this support, you know, at 200 and then takes off again. So do I think that the S-curve that I have is right? Yes. Do I think it necessarily hits 250 in October? No. I think it could abandon that S-curve. And then you would say, well, then it's not right, is it? Well, I don't know what I would say about that. It's hard to look at this and think that I got it all wrong when it's been like pretty much on point, you know, the whole of this year. And so it'd be difficult for me to go back and say, oh, it was completely wrong. I think it's a matter of whether right now we get the completion of that S-curve or not. And we've seen this before. We've talked about how every S-curve in a lot of ways is just an M-cross that goes up, right, instead of down. And then when the M-cross doesn't go, right, and you fail or whatever, then it turns into a, you know, just a typical jump over the creek and then come back down to it kind of moment. So a lot of it just kind of depends on what happens with that move, you know. And this is just universally true, I think, at this point. We can just say that because it doesn't seem to matter if it's AMC or GME or MPW or IWM or whatever. I think that's just kind of a rule of thumb at this point. So it wouldn't surprise me if it didn't complete, but I will say that right now it looks very positive. Like we're technically above that level. We've already made a jump. And part of me thinks that if we were going to not make a jump, we wouldn't have done this as high as we did. It would have made a lot more sense, in my opinion. It would have made a lot more sense to have maybe pushed up a little bit slower and done like a head fake here on FOMC and then driven back below. And maybe this is just a massive head fake, I don't know, on like a weekly level or something. But it almost doesn't make sense to have it as high as it came if this is going to be bearish. Like you didn't need it to do that. Could have easily have, and it didn't come above the top, which is also interesting. You know what I mean? Because like that would have been distributive. It just looks kind of healthy to me. So that's not a bad thing. But it would have been a lot more effective if you had driven the price up to like 220s or something like that and then slid back down beneath this creek and not crossed. This to me looks like a jump. So yeah. So what you're saying, Booksy, is yes, there's hope. Now, what's interesting about this is that typically, like on the outside of the other one, is you do get. I know it's a little redundant, but you do typically get a reactive move that's about the same as the drop in for the M. So the M's tend to have the drop in, and then they have a reactive move, like to the drop and then the reaction. This would be the drop and then the reaction. So if like a bigger wave, that's what you would look at. So you can see that's measuring out pretty well. It's not perfect. But it measures pretty well. If you go to 250, let's go to 251. It would suggest that the bottom is about, I'm just tapping on my keyboard here, 215.60. It may be a little bit off, but we could just say 215.50. So that works pretty well as a potential bottom target. 215.50 is right here. So if it can hit that and hold, that's right where the creek is. That's very consistent with what we're seeing. You could see that rally very, very quickly all the way up to 250. And it just, I don't know. I guess it just depends on the way the market digests all the news going on. If there's a desire to kind of just continue to sell the good news, then we might see it come down low for elections. At this point, I'm kind of, I don't know, kind of annoyed by that, because it's like, well, how often do you need to go back to 200, you know? I've been doing this repeatedly. And if you've got shorts in the play, like, stop letting them out, you know? Like, if you're the big gun operators at this point, it's like, you've had enough time. I think markets had enough time to reposition. So it doesn't really make sense to me to continually like go let the shorts take it back down so they can, you know, cover their positions or whatever. But you never really know the inner workings of the market. If what may make the most sense to me may not make the most sense to an operator. So yeah, I'm pretty excited. So this right here should be, if it works out, should be the rally that we're really looking for the small cap stocks. I think it's very likely. Going into October, Glenn Miller. Free advertising for Glenn Miller. Like, who's Glenn Miller? IWM, question mark, question mark, question mark, question mark. I'm confused. I've been talking about IWM for like 15 minutes. Did you just join? Rewind about 15 minutes or whatever. 10 minutes. Yeah, I just finished talking about it. I just did a spiel on it. I can't do it again. I can tell you that I already kind of had it baked in that this is probably going to head back down the creek test here somewhere. So it's got potential at 218 and then another potential spot at like, we'll just say around 214. If those hold and then it continues, you should see it advance. In my opinion, I think it'll rally in October up to the 250s. I think that if you drop through this creek again around 212, maybe 212.50, I think that we could be in for a very long fall season going into November, because it would be hard to explain that unless you're planning on going down for a longer term spring. So okay, that's the recap. Big picture, this is probably, like, again, positive because it looks like it jumped over the creek, which is usually what happens when it's bullish. So I'm suggesting that this is waves has come up, and if it holds support, it's going to rally and finish this bigger wave that happened here. So yeah, basically finish this move right there. It's hard to think that could be even as early as October 1st. It's definitely a possibility. Yeah, it's going to be near 250. It may not be 251. I've been saying 251, 252 forever. But if it hit 246, I'm not going to complain about it. I'll just be like, okay. Either one, it's pushing all-time highs, so it doesn't really make a difference to me. Yeah, so right now it's looking pretty good. I don't think there's anything to worry about. The only thing that would concern me is dropping like beneath like 213.40s or something at this point. Then we could be in for a very long, boring slog. So it's the difference between an S curve that is just an S curve and an S curve that turns into basically a full-fledged range, like a Wyckoff range. Okay, I said I wasn't going to recap it, but I recapped it for you anyways. Let's check on AMC, see what it looks like right now. Interesting price action. You guys are like, no, it's not. No, it kind of is. So 15-minute divergence on RSI. This has been falling down. RSI has been coming up. That would suggest potential for a local reaction. Would not necessarily be a full-on change of anything. 30 minutes is there as well. Let's check 1 hour. Going up to see, yeah. Yeah. It's also there on the 1 hour. It's a little odd because let me see something real quick. No, it's there. It's a little early to tell, but I would say if it manages to push back above 465, and it's at 466 right now, but it has to kind of push out and then hold above here. I don't see that yet. And there's another trend I've got on here, and that's that other creek. Remember the one that we jumped over and then we jumped over it again? We're sitting beneath it right now. So it needs to hold that. That's a very important creek to hold. It's that yellow line coming down. And I think it represents kind of the lower support on that creek, the lower support and resistance. There's sort of like two levels, like a layer cake. And we've been sandwiched between this this level 1 and 2 for a little while. We've yet to push through 2, but we really need to hold support on 1 first anyways. So that's a big test, and we haven't done that yet. So that marker, I've got a lot going on here, but I know what it means. I know what it represents. That marker to me is non-negotiable. Like it would need to definitely hold above kind of where it is now, but like later in the day, like right here. You know what I mean? If it did that, you could see this kind of break out. Based on the way that this traded last week with a lot of diamonds, you got multiple kind of upthrust diamond structures here. It's also important to note that there's been 3, like 1, 2, and then I think this is 3. I think this is a widening. I think it is a larger diamond. I mentioned it last week, and I said that I thought sometimes you see that structure builds out on the left and right side. I don't know if there's a better way to illustrate it than just illustrate it, but sometimes we've seen diamonds that form out and you think it's done, and then what actually happens is that it's forming like a larger diamond still, and then you'll even see one potentially like on the other side, and it looks like on the big picture it just looks like one, because you see the 1, 2, 3, 4, 5, 6 move right here, for example. But then if you look at like the small scale on either side, there's actually a diamond as well. And that happens every now and then in the market. And so weirdly, or oftentimes I should say, there's actually like a double flush that happens. So you get the diamond target on the first side and it's accurate, and you get the break to the upside, and then you also get the break to the downside. So you get like both of them breaking up and down. And then you do it again, right? And then this time you've got a much larger diamond target, which is the full width of the diamond to wherever that breakout is, here, up or down. How far could it do that? Look, I remember in 2022, SPY had like 9 to 12 apparent diamond structures that had been appearing on the way down. So I started doing speculation that we were going to form like a huge diamond and that it was actually targeting all-time highs and all this other stuff. It did prove to be semi-accurate. I mean, the targets eventually were hit. The all-time high obviously was hit, but it was 100% based on those diamond structures. And what I remember about that specifically is that it was pretty obnoxious, because if you started zooming in, which is the nature of fractals, you would just see those diamonds everywhere. So the diamond is a pattern of widening and then narrowing, and specifically it forms this structure right here. It's one of the it's actually one of the best structures in the market. Like, if it breaks out, it's got like a 75% likelihood that it'll actually hit its target, which is very, very, very high. The market does not typically give you those kinds of odds. So it's a really good target. It is, however, sometimes a continuation pattern. So the problem with this is that when you measure it, you might be assuming it's a bottom, and then it's going to break out, but it could actually be a continuation pattern breakdown. And like I said, if it's an early formation where you get that push up and then back low, it's not exactly over, right? You're really at the beginning of the structure. So anyways, so I had speculated last week that the way this was forming didn't really look, I said it kind of looked bearish, but then it broke out to the upside. So you might be thinking like, well, you were just wrong then, right? I don't know. Maybe, it's like, that's kind of complicated, because and I think I mentioned it too, if it breaks to the upside, you're like, well, okay, well, did it reach its target? Kind of, maybe not really, but it didn't break the widening that it was in, right? And then you're kind of looking at it as like a whip around. It's like, well, this could go down to 450. And that's what we were talking about early in the stream today, was like, technically, if it does the full whip around here, this goes down to like roughly 450, But then the question is, well, why isn't this enough? Couldn't this have been enough? I don't know. It could be. And then you just kind of go back and forth, and you just kind of see what seems most likely. Okay. So it's easy to look at this and say, well, that's definitely the middle. Maybe. We don't know for a fact it's definitely the middle. I think it's a little presumptuous. You don't know that until it starts finishing on the other side, and if it hasn't finished on the other side yet, there's no reason to say that middle's finished. It could be like that we're reacting back up to this floor, and then we're going to dump another 50% or whatever, which is usually the case. Kind of a halfway mark to 450, right? Think about it from the opposing side, and you'll see what I mean. Like, this is an advancement on the bear side. If this is like a buy-in on the bear side, you would expect this to be like an S-curve, right? And just do that. You know what I mean? So like, flip the chart upside down if it helps to understand that, hey, if they've advanced above that creek, which they did, and in our case it's actually below, right? Sorry, So if they advance below that creek on the sell side and then hold it, they could have another push off that tries to get lower. That's why I don't think 450 is like out of the question just yet. So is this definitely on this divergence and all the stuff we've been talking about? Is this definitely going to push back out? No. But there is a suggestion on the short term, all the way up to an hour, that it could be bullish divergent. And so if that's the case and it is quote unquote finished, then perhaps the expectation would be that you would do it again on the opposing side. So unfortunately, this adds a lot of complication to the matter because this is a very weird looking diamond structure if that's the case, this widening. You might expect it to just kind of pop, have a similar move that as to what happened over here, perhaps, you know, somewhere in the midst of all this, and then start narrowing again. None of that really matters to you if you don't really care about the chop, because if you don't really care about the chop, then you're really just waiting anyways. This is just representative of, you know, the chop structure. So it would be like something akin to this, where this would come back up to like 478 or something, and then it would come back down, and it would be just kind of like a pump and dump schematic. Could all happen today, even, yeah. And then you still have to ask the question, like, is this finished, or is it going to do it again? You know, it's like, I don't know. These things can be really frustrating. The diamonds, I mean. If they're not, and then you have potential for even a deeper drop. So in some ways, better for us to go ahead and just hit 450 and then exit with strength than to kind of chop here longer and then present itself as a potential for an even bigger drop later in the week. Heard it called a camel pattern, like the humps of a camel, maybe. Yeah, that's fine. I like diamond better. I think it's easier for me to visually see it, but I mean, whatever you want to call it. Point is, you're continuously up thrusting right now, made slightly higher high here at 481, but you're continuously up thrusting past the previous diamond level. And that's been kind of the simplest way of understanding these up thrusts, is if you look at each of those diamond floors, you can see those up thrusts have been happening back to the previous one, and they're widening. So that's a good sign because it's heading down and widening. But then you have to ask the question, well, where is the next floor, right? Because if it did it again, the next floor is at 465, which is the bottom. Which is why if it did drop again, presuming a lot here, but if it did drop again and it had this drop down to like 450, you would expect there to be some kind of reaction back to the previous top. And you'd want to see it happen in a different way. So the way that I've got this drawn out does seem pretty right to me at the moment. You wouldn't want to see something like this again where it's doing like crazy volatility pumps and dumps. This is very distributive, very low buying, big up thrust with volume, low buying, big up thrust with volume. It's kind of backwards in what you want. You want it to be rounded top, high volume bottoms. So you want it to invert this kind of pattern. And we're not there yet. We haven't done it yet. So does that make sense? So you don't really like this up thrust with like really low trading is very distributive action. So these diamonds haven't really been very strong thus far. We want to see that change. So if we do see it go down again, and I think it's possible that it goes back down again. If we do see it go down again, we really want to see that change of character here. Otherwise, we're probably going to see it do it once again, like another series of up thrusts that then drops lower. I would prefer to go ahead and get that spring right along 465. So We will see. So does that mean this is going to be a nothing week? Some of you are going to ask, is this a nothing week where nothing happens and we just stay low all week? Look, I'm not going to sit here and like sugarcoat it and say that once again you're going to have a nothing, it's going to be some great week. It has to be. There were some things that suggested that by Monday you could be taken off, but we didn't make the right moves. I mean, it's pretty straightforward. We needed to be down here a lot sooner, and we didn't get there sooner. It's just a very slow move. When I drew out the move, if you guys recall, I had it coming up here, and I suggested that this is where it kind of broke down and then went low. And so when you're heading into the end of the week, you'd already be down here, and then basically like by Monday you've done your kind of spring action, and this is where I had drawn it out originally. So if you go back to like September, I don't know, 7th or 8th or something, we came up here. I suggested it might be another cat ear breakdown. That's when I was timing it out to about the 23rd. And a lot of it had to do with where FOMC was, thinking that it was going to dump really hard. It did not. This was a very controlled, sideways, slow action. I 100% had based it on, I recall this too, I remember doing the trajectory. I thought that the trajectories would be more important in this case, so I 100% based it on the trajectory up, in and out. So I had imagined we were going to be there before, even before FOMC maybe as possibility. And if nothing else, if it dumped on FOMC, you'd be there before Friday. Did it get there by Friday? Yeah, but it was like really sluggish. Like I thought we would be there maybe on Thursday, if that makes sense. Small things like that make a big difference because the timing of it changes quite a bit, when you see this widen out. So the wave itself has less momentum. It's less steep. It kind of stinks because I hate that it's like, oh, well, every time it was this widening out, seems to stretch it by like a week. And I'm like, yep. I wonder if that's part of the design in it all. It's just to kind of continuously present itself like it's going to move quickly and then it doesn't, And you're like, well, I think you would learn by now. You would think. No, but really, like, it is important because trajectories do matter in the market, but it's like it's not always easy to identify like where that trajectory should lie. One of the things that I've noted in recent times is this breakdown seems to be pretty significant on the foretop, like the 1, 2, 3, 4. But again, it's like it's not always easy to identify where that even is. So in this case, I do think it was the FOMC area, but I think it was like right before it. I don't think it was this Wednesday. I don't know. See, it's like frustrating because I'm sitting here like doodling it like, well, it's really hard to tell. And there's a series of them, but I think maybe this one would have been a better trajectory to use. This is 45 degrees on my chart. Yeah, see, it's a little bit better. It actually worked better. At 45, it's a stronger trajectory. But I don't know if I would have known that at the time, because at the time we didn't have all the information. We just had that one move. So I was like, looking back, it's always easier to see it in retrospect. But I think this was probably the better one. I may have had this line on the chart at one point. Anyways, I digress. I was wondering about that too. I was wondering if it's targeting the ice. I thought it was, but it was like way over here. And now that I've done it like this, that is where the breakdown is. It's not even on the marker though. Can you really do that? Is that reasonable? And I always kind of think about whether these are inevitable or they're just optional. I think a lot of them are just optional. Still, that October 7th looks pretty good as either a point of a bottom or a point of intersection. October 7th looks pretty good. Like it'll be a bottom pivot or it'll be like a rally point. Just keep scooting it along, Booksy. Who's DZ to go live? Waiting for somebody else to go live? Well, hey man, if you guys are here waiting for someone else to go live and you're just hanging out, I'm happy to have you. I don't take offense to that at all. Appreciate it. You could have picked any other voice to listen to while you waited. Thanks for waiting with me. Yep. This is big picture looking pretty similar, like a widening. I think that we're getting to this point where I know I've got so much stuff on the chart, but we're getting to this point where it is good just to kind of remind yourself of some of the simplicity of it. I'm glad that we looked at this big picture a while back too, because there is a simplicity to this as well. So, hey, I don't mind. You know, some of the best musicians to ever have existed, actually probably all of them, have been the opening act for somebody else at some point. You know? That's how they get, I don't want to say fans, that sounds weird. But that's how people like come to know them. It's like you don't know them until you hear them. So, and I've looked up a lot of bands. I remember going to see somebody live and, oh gosh, what was it? Some Korean group. Was it like Monsters or something like that? They changed their name later. They weren't Korean, but they had a lot of Korean Americans in there. It was like all Korean Americans or something in their band. I can't remember. Anyways, there was some opening act, and I remember like the opening act really stuck with me. I was like, that was a really good opening act. Like I really liked them. I think they were traveling with a different group. I can't remember which concert it was at this point. It's a while back, long time ago. But yeah, I don't think there's any shame in that. Happy that you guys are here. We'll just talk through some stuff. I don't know who DZ is. Are they good? I'll have to check them out. Yeah, I think that big picture wise, this looks pretty good. So you get the gist here, and I like that we did this on the daily because I don't know what happened to that other one. Hang on. Oh, that's why. On the daily, the EMAs are all weird. This is the 4-hour 180 is the way I set it up. But on the daily, it's the 90, which makes sense because you're cutting the time in half, or you're doubling the time. So that's up here at like 493. It's funny too. We were talking about 493 as like that's the place we want to break above right now. I know this is a messy chart, but that's really the target that I have in mind for like the breakout. And now I'm looking at it, I'm like, yeah, that daily 90 right there at 4, and which would be the 180 on the 4-hour, looking really good at 493. And then the 200 SMA, we've been eyeballing that quite a bit. This is a historic breakout moving average, meaning it doesn't often break it and hold it unless it's going to break out with some extremity. And there's been some times where we've come above it and distributed, but the biggest time where we've actually not done that was back in January, which is a pretty significant move. I think mildly in March and August of 2022. I'm not going to zoom all the way out. But we've been dancing around that for a bit, and I was just talking about this widening spread right here that started on August 16th. The motion of the stock has been moving farther and farther on each of these waves as it's coming down. which shows that there's potential for reversal there because bulls are like kind of pushing back farther and farther as bears are trying to advance. And what's interesting about this, and bears are trying to advance, they're trying to push it back down below that floor right around 493. What's interesting about this is also like a whip around. I think you can see it pretty easily on this chart on the left. It's also a whip around of this level here. You can see that widening almost looks like a perfect, almost looks like a perfect whip around. It's starting to look like a nice clean, almost looks like a widening. We'll see if it stops eventually and narrows, but you see how the wave itself, if we were to pick like, well, where is it waving around? Well, it's interesting because the market has a way of kind of building out these structures that it just makes sense. This is the creek that we chose a while back as like the main representation of our creek. And then when we raised up, we used the higher points on July 22nd and August 26th. I want you to look at this. This is really cool. So that creek that we chose as like, this is kind of where the main resistance is. This is the one that we jumped after we had the change of character, right? We jumped like a little one, held support. That was like the steepest creek here. And then we pushed above again. That was the one that jumped in August, at the end of August, where we said there's a possibility it runs, but it came too high. And when I was like, well, crap, it came too high. It's probably going to go 470s or whatever. And then it did after it broke 503. Okay, that's already happened, neither here nor there now. But like looking back at that line, notice that trajectory very closely matches the SMAs. And I had a little brief conversation with someone in the Discord about this. And I just don't name people in the Discord. I could go, name them. But I'm just saying like that not typically something I'll do and say who it is just for their own sake. If it's something embarrassing. This isn't embarrassing. But they were just asking me about, hey, what's the difference between a creek and a trend? And I told them, I said that there's not always a difference. The idea of a creek comes from like a later interpretation of Wyckoff ranges. It was like 50 years ago or something. But Richard Wyckoff lived like 100 years ago. It's been around for a really, really long time. So the creek was a new addition to Wyckoff. A lot of people call it Wyckoff 2.0 or whatever, and they talk about all these other things that were added later from people studying stuff. The creek itself predates EMA lines as we see them nowadays, which is on computers. So when you look at this 200 SMA, which someone pointed out to me in the chat here, I wasn't the first to kind of notice it. It's been acting like the creek, like it's been acting like a resistance right here, especially going into, I would say, starting back in June all the way through August 12th. So it's not mutually exclusive. Sometimes a creek will basically be the trend, simple enough. Sometimes it's not, and it's important to know the difference because especially if the stock curves away from a trend and then kind of builds back out towards it, sometimes the creek actually is building kind of more like a parabola or a curve, right? Whereas it will break the trend, but the trend itself may be irrelevant at that point. It may have that breakout and you're expecting it to just run. And yeah, it's no longer in that trend, but it's now built a creek that's much wider. Like, for example, right now, is there a trend from the top point July 27th through the bottom point here on September 9th? Yeah, roughly. But there's also kind of a lower creek because it started to curve outward. See that? So you might say, well, why don't you just use that as the trend? Well, like you could. That's what I'm trying to say. It's not mutually exclusive. So as it's turning outward, it's kind of like like once it jumps up over the support, if and when it does that, if it were to break above, let's say up to 520, you would expect it to hold here around 493. Like you see that? So like it's curved up quite a bit. So the idea of a creek versus an EMA is very similar. Sometimes they're basically the same thing. And so what's fascinating is we chose this as a parallel a while back based on this downtrend that we established when we started doing all this craziness back in July. We used a couple downtrends and we picked out this one and I applied it to the top. And then I used that as the creek, and I've been using that as like kind of creek number one for a while. Notice that we're wrapping around that creek right now, and it does definitely look like we're wrapping around it. If you look at the right side here, I know there's a mess on this little area, but look at the right side, and you see that wraparound that's going on. It's almost exactly the same. It's not exactly the same. It's almost exactly the same as the 200. Does that mean that you're just seeing things or whatever? No, I think it's just simple like positioning of the stock. Like they're aiming, when you're shooting a bow and arrow, you're like taking a direction. That's the trajectory that you're aiming towards. You're going to line it up with whatever makes the most sense. And in this case, that early creek resistance, that's where the creek formed. It formed at the EMA. You may say, well, then why even do creeks? Because the idea of the creek as it evolves is very important. And you need to know where the creek is in order to know when it's lost. So one thing that I would be cautious about right now is I would be cautious of saying that this 200 is the only creek that exists. Like there's no other. That's not true because it's already pushed above it a couple times, right? And you can see in this widening that that's already happened. So it'd be silly for me to sit there and say that, oh, well, only the 200 matters. Like that's not true. There's clearly like a resistance right here that's been pushing out above, right, as it widens. And there's also, to some degree, right, one below as well. So you might say it almost looks like Bollinger Bands around that 200 right now. You're right, it does. It almost looks like a standard deviation because it's whipping around it, Not complicated, all right? Mathematical whipping around of the 200, sure. But it's interesting to me because the level that we picked out, which is this, again, this parallel, which I've just been using as the representation of the creek, some people have looked at that and they say, well, it just looks like a trend because you drew a straight line. Yeah, but notice it's a very good representation locally of what we're seeing on the big picture with this 200. Almost to a place where it's kind of redundant. So sometimes folks will say to me like, hey, have you noticed that this EMA is like right there? And I'm like, yeah, I'm sure it is. And I say that in a very coy kind of cocky way. And you're like, well, that's annoying, Booksy. But the reason I'm saying that is because it almost always is like lined up with something that makes sense. Like remember the middle liquidity? That was also lined up, and you can see this other EMA, and we talked about this. That middle liquidity at 485 was lined up with the moving averages. So it becomes this kind of, again, it's not mutually exclusive. These are overlapping circles, like in a Venn diagram, right? They often share and occupy the same space. And I would actually be more concerned if they didn't, because it almost makes no sense. Like, why would they? Ignore those things. And so many people trade off of technical indicators now that it's sort of a self-fulfilling prophecy, right? That, yeah, naturally, if there's a technical indicator, people are going to trade around it. And there's dozens and dozens and dozens of them, So it kind of all collectively adds together. And you can chalk that up to your quantum computer mechanics, being able to see everything all at once and act on it all at once. Whereas you may only look at an EMA, I may only look at a creek. We're both kind of right. Both kind of right, both kind of wrong at times. But typically, like, this is what I would expect. So, really cool because right now it's like I'm looking at the big picture and I'm thinking, hey, this has been wrapping around quite a bit, this 200. And we're doing a similar thing right now. And last time we did this, we dipped below it and then we wrapped around it and then dropped from it. I want to say, without being too specific, that this was about a 50-50. You really like those 50-50s, Booksy, because they work. I wouldn't like it if it didn't work, you know? But it's also just a measuring principle that just makes sense. Like if this becomes a waveform and you know where the middle is, then you should be able to identify like the measured move out. So what's the danger right now, perhaps, in all that? Well, I kind of talked about this last time. I think we talked about it last week. But it's essentially like what we were expecting anyways, like, which is basically like if you're looking at this as like a 50-50, roughly 50-50, then this takes you down to like sub 440s. Okay? So that would be like breaking down again off of 465. Where would you go? Why is it so perfect? Good question. I think it just is, right? So one of the things you would say, you're like, why is it? Just because it is. Meaning like, why did it set up there at this particular time right now? I think that's just the nature of the market playing time against value. Like bending this SMA up so that it meets here at this particular time probably isn't an accident. So that you could do the spring, right, off this particular level. So a lot of this stuff is going to kind of sync together if you're doing it right and if you're looking at it right. So yeah, is there still an open door possibility that this thing could dump to the 440s? Yeah, absolutely. I think it's still there. And it's more and more reinforced as you go up. It's not 100% like, oh, it has to be this way, but it is certainly a possibility. Now, one thing that I would note, though, is that on this 200, we haven't been able to hold the support yet. So even though, yes, this is certainly building out, like it could do the same thing right here, we're basically assuming that it's going to do the same thing. So that's an assumption. You're saying like, well, it's done this twice. That's the pattern. It might do it again. Okay, that's fine. You can do that. Does that match up with other analysis that you have? Yeah, kind of matches up with this idea that we might go 50-50 around this rising channel. So that's a bigger wave up and then down. So certainly there's some matching features there that you can argue would say, yeah, I think that it's clearly moved like 50% above 465. When it pushed up to 511, the 50-50 wraparound gets you down to 425. The 425 is a 50-50 wraparound of this ice level coming up at the intersection point. It's just a big wave down. Sure. All that stuff on the big picture syncs up. However, that just increases probability. It doesn't mean that something has to happen. So maybe instead of it being like a 30% chance, now it's like a 70% chance. And you're like, okay, well, what's left? Well, this is where things get kind of interesting because in the market, you can't have traps. You can't have change of character or whatever without behavior that's already pre-established. So like one of the things I hear a lot is that you can't do TA on these stocks. It doesn't work. And I'm like, well, that's dumb. It clearly does work. And that's how I feel about it. And I don't mean dumb in like a mean way. I just mean like, I disagree. It's pretty evident looking back at this that yes, there were 50-50 swings around the 200 SMA. I don't know why you would argue that. It's definitely happened. So the idea that you can't do it here doesn't make sense. Clearly the indicators are working. Clearly the creeks are working. But one of the things that I always respond with when people say stuff like that is you can't have bear and bull traps without setups, like pre-established setups. There is no way to trap a bear or a bull unless they think there's a technical breakout. Period. Think about that for a second. If you have no technical breakout, there's no such thing as a trap. It just doesn't exist. Why not? Because people don't buy the stock randomly out of nowhere. And this is where I think there's a huge division in maybe the way people understand TA is like people are assuming that it's just some random move that you couldn't possibly, you're just holding on and waiting for some random move, like as there's no structure, which by the way, 100 plus years of technical analysis would disagree with you. That's like saying that you can somehow, I don't even know. It's like ethnocentric, it's like time-centric understanding. Like, I just joined the market. Let me tell you what's true about the market. Okay. How long you been trading? 6 months, a year, 2 years, 3 years? What about the, millions of people that have traded it for the last 100 years or so that did technical analysis? Do you think they're all wrong? And you're right? And you're very limited? You know what I mean? Like, that's kind of the argument. Anyways, one of the things I think about, though, is that, like, when you look at TA as it doesn't work. This idea of, like, manipulation and, like, tricking retail and all this other stuff, like, none of that would be effective if there weren't any kind of technical analysis at all. Which is why penny stocks are like the Wild West. When there's really no involvement with any institutions at all, it does become almost 100% news-based and very random. And that's when it becomes like a pump and dump scheme, which frankly, I find those people to be way more manipulative, right? In terms of trying to manipulate the price action to get out of their stock position. That to me is like manipulation. But the idea of like, oh, I'm buying more than retail is so that I can push the price around. Yeah, that's manipulation. But it's accurate supply and demand manipulation. Like, I can't buy 30 million shares of this and push the price around. That's why this whole thing with Keith Gill has made such a bunch of craziness, because he's built himself to the point where he's able to essentially like buy enough at different times to actually change the price and to be this big whale essentially, and essentially an institution unto himself. So why am I talking about all this? Because you have this established pattern that this breaks down and goes low. It's certainly at this point seems very obvious that there is a possibility this comes down low. Nobody would say that, I hope, if you've been watching for a while. But you cannot have, again, a change of character and a change of direction without a pre-established behavior pattern in place. So if this behavior pattern is in place, it is very, very possible, right, that you're going to see that change. And that change, I think it's pretty easy to tell. It should be right here at 465. I know I made that argument before that 465 was actually the better spring than something like 440. This is why, because I think, again, this is just another reason to say, yeah, that's where the floor has largely been. And it doesn't really make any sense to trade down here quickly. If you're going to come down here, you'd have to trade for a long time. I was making that case earlier because there's no real like liquidity floor down here at all. It's just empty space. But you do have one at 465. And so I find it, again, just kind of another form of evidence, perhaps, that 465 is like the truer level, and that we would see some kind of a move to hold and not break out, not break below that 200. And that would be a major change of character. So if the pattern, let's say it even now, let's say it comes up again one more time and then it drops low and it goes to like 450, right? That's still potentially a change of character because it's not a 50-50 whip around of 465. If then it came back up, made a new high, then held that SMA, that's it. It doesn't complete the pattern, but it has successfully changed the character. That's the kind of stuff that's golden if you're a technical trader. That's the kind of stuff you want to see. You want to see the change. In order for you to see the change, you have to know what's expected. So I'm putting it out there right now this week that this is kind of the expected behavior, in my opinion. Like, I'm looking at it like I kind of see this as the most likely thing to have happen. But I'm also going to put it out there that if we were to just dip to like 450 and we bottom there and then react back above 465, kind of like this blue scenario, I think that's basically going to satisfy long and short term change of character. So a lot of people are talking about GME. I see it in the chat. Yeah, so we mentioned it this morning that if it broke back above 22 and held it, I had a little doodle. I guess I deleted it. Very first thing when I first came on the stream. Hey, stop stomping. It's driving me up a wall. It's getting on my nerves. You've been doing it for like 15 minutes straight. If you push up here and then you come back down and then try again, you should be able to push maybe even as high as 2310. It's worth noting at this point that's not technically a breakout. It may seem like it is. There's a wave. Hang on here. I think it's from the very tippy top. Yeah, it's way up there. And it's pretty much where we are right now. Yeah, I don't know. Yeah, no, it's this one. I'm sorry. It's from June 6th down through September 9th. That's where we were touching right now. And then if you were to push out above that and you moved up higher to even like just slightly above 2310, maybe to like 2350, that's not actually a breakout. So it may seem like it is, but it's not, because you haven't jumped the creek. Creek's pretty high. It's up here. It's a retest. So even a gap fill to 2310 or even slightly above is not necessarily a breakout. It'd have to move above that, pretty much back to the 24 level, hold support at 2310, then it could continue. Otherwise, that S-curve is completed without actually breaking out, and it just is. It's like right here to like 2340. That doesn't actually break out. You need to understand that, because if it goes up to fill the gap, you might be really excited, but doesn't necessarily mean it's going to go. Some of you are always like, well, what about the volume? What about this? We talked about that earlier as well. It's like you could have high volume that indicates a buy-in. You could also have high volume that indicates a top. And if you come out here with weakness, then it's possibly indicating a top. So I know the 15 minutes not the end all be all, but up to an hour it's already overbought, and then the 15 minute has divergence down. Could it just be a flag? Yes. And that's what I was saying. If it's an S curve, it may still break out again, but you're going to watch, because if it goes up high to like 2340 and this RSI doesn't come up very high, it's still divergent. That's not a good sign. It's showing you that the underlying strength of it isn't quite what it seems. So when I look at this, I'm not trying to dampen the mood. I'm just saying that there's a series of events that needs to happen to build out support above 23 and then go up to 24. That would have to be the cross of the major creek. We're not there yet. So be excited if you're trading short term. It's a good move short term. It's 20% from the bottom here for sure. You know, that would be a positive move. But long term, I hate to say it doesn't mean anything, but it's kind of like not there yet. It would need to pass pretty far. I mean, you have to get at least up to 24 and beyond. AMC is different. It does not have to move as far, you know, to get to its breakouts. GME moves pretty far on these moves. So mixed bag, okay? It's also potential that this is like kind of checking that creek again. This is a resistance, so we don't necessarily have to go into this too much. I don't want to get people like worried about things like a head and shoulder or something, though that I guess it's a possibility. But certainly, like, yeah, I mean, you're talking about a resistance level here that had been jumped and then failed. I think it actually did it like right there. It was a little more like a flat like this. So there was a sense of, and I had it drawn backwards to the top way back here in July. This resistance was jumped in August,
going into September, and then it came back to check it, peaked below it, and then dumped below it. And this ends up being kind of the 50-50 slide around, again, on this big up thrust with the downward move. So we're kind of in the same spot right now. We're really looking at that as potentially, yeah, it's a good place to break out, but it's also potentially like this is just that particular spot where you would have a nice head fake. So again, caution. Volume's high though. Yeah, volume was really high too back here in September. In and of itself, volume does not mean that you're running, okay? It cannot be by itself. And it's a very similar move. Remember that first big push, and then it backed up and it did this kind of wedging action? It's a similar move right now. You got that big push, a little bit of a backup, a little bit of a wedging action. Well, it's going to hold eventually, right? Maybe, you know? And that's the thing is like, it's not that this in and of itself is necessarily bad. You know, if it pushes high enough and it doesn't come all the way back down, it could be really good. What lacks back here could be different here. So what happened back here was that breakdown, right? It didn't hold that trend. This has thus far held the trend, but it's on a razor's edge. I mean, once it broke that trend, it broke down and it came back below that support. That'd be like us dropping from here at 22 back down to 2070 essentially, and then losing that support. So I had marked off some levels early in the day on GME that I would watch for. 2070, 2015, 1936. Those are levels that if it started to come back down, you'd watch those for supports. But the best support would be above 2015 or even above 2070. And everything else could be potentially catastrophic. Like you could see a bigger and bigger slide. So yeah, just keep in mind that it's not like all bad. I'm not saying that. It's just be careful. In order for this to be good, it has to continually push up enough and then hold once it gets up here. That could be positive, right? If it came up here and held this level and then pushed up again, then you're in good shape. That's really where the creek is anyways. So we got a bit of distance to travel. Okay. All right. I don't think I'm going to recap WTO again. I think we talked about that enough. Watching and seeing what happens around 50 cent is enough. There is a gap to the upside near 58. That 58 really crushed it on Friday. That was kind of all there is to it. It dropped the support, so didn't hold it. IWM, I'm doing my recap right now. IWM is consolidating still. Looking downturn, I would suggest to you that it's better for us on IWM on the small caps to come back down to 215 here on this ETF and break from there. I think it would be a stronger break. Ideal, you know. It could come as low as that. I think there's one around 211, right? Could come as low as that gap, but it would have to do it maybe a little later. Like fill the gap more like next Monday, not now. You don't want it to break down right now. Or if it did come down, it'd have to recover. Sort of the inverted move, like come low and then come back up. If that makes sense. You'd want to hold that creek about 214. So that'd be a non-negotiable if you're going to see it continue on the S-curve. AMC, really just eyeballing 465. Local target of 450 on the breakdown here. I don't think that's going to change. Meaning that that's just the local target. If it doesn't hold that level in terms of like a bottoming action between 450 and 465, then my expectation is that it's going to go ahead and head between 425 and 440. I don't think there's much else there. There's no other reason except to come down to sub 441. could be as low as 425. I think that's a bit dangerous, but it can do it, so I'm not going to suggest that it can't. But I just think at minimum, if you're going to do a spring down there, it'd have to be below 441. So we'll wait and see. Cautiously optimistic about that. I'm kind of trying to convince myself more and more that that may not be the case. I think there's good reason to not do it, is what I'm trying to say. To kind of fail to get there would be really potentially good. But I don't want to make it sound like it can't happen. It definitely can happen. 425 is absolutely in sight. And I hate that because I didn't want it to go that low. I do think 465 is the stronger floor, though, like for liquidity purposes. So breaching these outer creeks, holding 465 and then breaching these outer creeks would be the big change of character that we're looking for. And I think that happens soon, but again, it's sort of a dependent on, I think, the larger market. If IWM goes into this slog of a downturn into November, we're looking at a very different situation. I'd be very careful to say that AMC and GME would somehow run without the rest of the small caps doing well. It would be kind of strange. It'd just be weird. Yeah, it wouldn't. I'm not saying it can't happen. It's just one of those meh. You're kind of making an assumption, and I just don't think that would make sense. If all small caps go into like spring bottoms, then I think you're going to spend a lot more time for AMC. It would spend a lot more time potentially down low. Yeah, and I hate to say it because it's kind of like the bummer situation, but it would basically be like a full October, maybe trading between 460 and 430s until November. That's what it would look like, probably. Or it'd be going down to $3 and just getting that over with without any kind of a move up. It'd be kind of crazy. I haven't looked at a point and figure again in a while. I might do that. Maybe I can't do it tomorrow. I won't be able to stream tomorrow. Maybe by Wednesday I'll do it again. I want to get to it, but I keep forgetting to do it. So GME, don't particularly care about this price action at the moment with the dropping volume, the higher highs, and the wedging action, massive wedging action right here. It seems kind of obvious that it's running out of steam, but it could come back up to maybe 2310, but it would have to break above that and go above the creek. So I just don't see it as overly positive. If this is an S curve, you're going to get a big extension up and then some kind of topping action. Otherwise, it just looks like a rising wedge to me. RSI is divergent. S curve might do that to you. Big picture, at least on the hourly, it's overbought. I haven't checked 2 hour. It's getting there on 2 hour. It's almost there. This is really close to what we drew out a while. I don't remember when I did this, but it never came back down here. It just kind of jumped. Didn't ever check that. It just took off. So I'd venture that 4 hour up is probably not overbought yet. Not even close. So there is a lot of room on the larger time frames. Anyways, so like I was saying, I wouldn't mind it coming back down. I would just want to see it come back and find those supports. MPW, if it breaks this creek here, and it'd have to come back above roughly 591. I had made a marker, then this divergence pays off up to the 30-minute time frame. Pumps back out. It would probably find support kind of where it's at, but somewhere around 576 or 575. And then it could potentially continue back to the upside, break out here and go up. It would have a target of Yeah, I think I'm about right. It have a target of about 625. I think that's more likely than anything else. And then I do expect at that point it'll probably come back down. I still think it's going to try to get back to somewhere around or near that 550 to 560 support. Could be fine. Could just be like an ABC correction. Doesn't have to be anything crazy. Doesn't have to be some crazy distributive top. Could it be? I mean, maybe. Part of me looks at this and sees what appears to me to be a lagging of behind IWM, with the topping action, the backup, and then the jump. And IWM had like a nasty slide all the way back down to its support level. I don't know why it would be so 1-to-1, but it does have that vibe to it where you could see that drop come all the way back to 5. So just brace yourselves for that. It may not be pleasant. We'll see. I'm not there yet. I'm not at that point yet where I'm kind of thinking that's happened. But I see that push up, the M cross, push up. I think this wave is done. This should be the pullback for this wave, and then you should get the last leg of the bigger wave, which is great because that's a pretty huge move. This should be the big rally move. Oh yeah, that looks good. It's looking really good. Yeah, I feel like it's going to be pretty tight here. I had this one election date target of 9. I'm kind of looking at this now like almost like this is almost inevitable. Like that looks really good. Like the distance from, so this is also like a fib extension level. It's not just, and it's an S-curve level. So it's like multiple things. There's a lot of targets that seem to terminate between 9 and 950 here. MPW, by the way, is one of those technical charts that I dream of. This kind of stuff is like great because it's so clean. It makes such a good impression in my brain because it's so clean. Like the targets, they just tend to be really nice. So yeah, isn't that weird how that looks like a mirror almost outward? This move down here. I don't like the idea of a bars pattern here, but maybe a little bit misleading. But it's yeah, I think that's really interesting. Should be like after this wave, like this kind of a push right here. Man, it's close. I wonder if you could count this as like that, if that's even a thing. How would you do that? I don't know. I don't know how you do that. This gets into a whole lot of math problems that I don't really want to get into. See, that only goes to like the bottom one here, like 735. This doesn't count this wave though. It just doesn't make any sense. That looks really good. Sorry, brain farted for a second. I'm just trying to see something, and I'm not sure. Keep adding stuff, and then I get confused. Seven degrees. Oh, it's the same angle. What? Oh, okay. So this hit a top. That's interesting. This hit a top after jumping over here. It's so clean. Golly. Oh, look at that. It's like right on that pivot too. My gosh, this is clean. But the question, I guess, is where is the bottom? It would have to be here. Let's just do that. Let's see what we can see with that. Let's just do it. Might as well. It's so clean, I might as well try, you know. But I know that's not right. So where do I go? Yeah, that ain't right. Maybe I just use the same angle. $30 degrees. Yeah, I don't know. The angle of it's pretty clean. Assuming it doesn't just go parabolic or something. It's the same exact angle. Ooh. October 24th again. That comes up twice. That's a really good one. Yeah. This is good, man. This is a good chart. I really like this chart. Like MPW's chart's so good. Things just work. I love that. I just do. I like it a lot. Like that's such a good chart. It hurts my brain. If everything moved like this in the market, you'd be ridiculously well off. It's like a perfect intersection on these waves. Here, here. So then you would look for like a 50-50, but I already know what it's going to be. Yeah. Interesting. Man, it's going to be really close, guys, to that. It's going to be really close. Are you guys excited about the October 7th thing? I don't think anyone's as excited as I am. Y'all are like, nope, sure not, Booksy. Not excited at all. Man, I don't know how you couldn't be excited. Like, it'd be hard to not be excited, is what I'm trying to say. What October 7th thing? Oh. Back in May, probably, or thereabouts, maybe slightly before then. Maybe April, I don't know. April, May, somewhere around there. Because that's about where I started talking about MPW. I identified this as a stock that I really thought was a good long-term investment. And I did a long-term outlook on it. And while I was doing it, I stumbled. I don't know if it's stumbling. It sounds like you're just kind of like accidentally doing something. But I noted that there was a really important cycle that had been happening. And I guess it's better to look at like weeks or something. I don't know, so you can see it visually. But there's a cycle here that goes every 4 years, and it's a high low high low high low kind of cycle, and it's going from a low cycle to a high cycle. So every time it's been in these low cycles, it's had rallies to the high cycle. In and of itself, all that would mean here is that you're probably going to break out of this big wedge, which we have big widening, and it's pretty significant. Massive divergence over the course of like 2 years. 2 years of weekly divergence. That's insane. And then breaking out here. Big deal, right? And so there's all kinds of good technical stuff to look at. So my suggestion was that they would be in an upcycle. But what was really interesting to me about that at the time was this particular cycle was strangely predictive. So there was a let's see if I can find it. There was an interesting kind of build out that was happening in these cycles that was causing it was a 201 bar 1407 day cycle, and basically what I identified was that in this cycle it was a series of trajectories that were built, and at the beginning, I don't know if I can explain this any briefer, so I'm just going to kind of run through it. Every time you hit a cycle, it establishes a trend, and that trend establishes where the next target is. And it's not inconsequential, meaning like it's very, very consistent. So every time they reached that 4-year mark, they establish a directionary trend that goes to exactly where you are at the next 4-year mark. And it's not even close to being like it's exact. Like it was almost too exact. It was so exact that I couldn't ignore it. And so if you have the proper trajectory wave and then the timing, which is this cycle of 1407 days, you have a target, and it's the exact target that was hit. So it's strange. So basically every 4 years they established a series of markers on tops and bottoms indicate future tops and bottoms as per the wave. So it's basically a waveform analysis, like down, up, down, up, down. Does that make sense? So if you look at the arrow markers, and it's always like right, I don't know why this one's not on there. It should be right here. There is one there. It's always right on the nose. So it's always right on that date. Every 1407 bars, so many days. It's almost a perfect 4-year cycle. Okay, 1407. You might think that's super specific. It is super specific. That's what made this. This was why part of the reason why I wanted to trade this, because I'd never seen anything quite like this, where at exactly those pivot points, you're given essentially the next target. Like, it doesn't even make sense in my brain how that's even possible. Unless you just have operators who are just so specific. But they're essentially giving you like perfect markers, trajectory markers towards those intersection points. So what I did is I went through and I marked them all down. And then I went to the last one, and I used a series of maybe checks and balances to, as best as I could, determine where I think, like how you should make that marker, and like what would be the best way, I guess, to make that marker. And let me get rid of some of this other stuff because I've got another chart now. So basically what I found was that the way this is set up, again, as a consistent pattern, that the next cycle should end on October 7th, okay? Which is not really an option because it's a bars count, so that timing is not a fluctuating thing. It's just like, this is the bars count that I'm using for this particular cycle, okay? The only thing that then matters is identifying the trajectory from the 4-year prior mark, which is back here. Now there's a series of them that you could use, and I had a lot of debate about it because I was like trying to determine what made the most sense. And what I found was that even though in the past there were some very specific ones that were identified, that like this point, for example, in 2017, by itself, it works, but you could have some confusion about it. Like, it's always easier to do stuff in retrospect because you know where you're supposed to be going. So when I looked at it backwards, it's like, well, yeah, I mean, did it get there? Yeah, it definitely got there right here, right? But then I look at that and I'm like, does that trend really exist? Or did I just make it up in retrospect? Well, you can be the judge of that. I mean, I think, yeah, absolutely, 100% this does exist. So I'm just showing you as an example, like this one right here is one of the cycles. Does that exist from this point to this point? Yes, 100% it does. But in order to inform this area, and I think the same thing applies back here to here as well, in order to inform this, you gotta have to set up and establish certain rules. So one of the things is like, there's typically like a 50-50 between these points, and that tends to go through the 50-50. So you can see I've kind of drawn these two boxes. So look at the point A right here on January 17th. Look at point B here on November 20th. And then look at where that 50% marker is. I drew a box from A to B. The 50% marker is also met, strangely, during that time. If you go backwards, check out this. Look at point A right here on March 13th. Look at point B right here on January 17th. Look at the 50% marker right there on February 2015. And did it hit the 50% marker? Yes, it did. So these waves are accurate in not just the timing of them, but also roughly where they're at that 50% stage. Now, it doesn't work every single time, but the 50% does every single time have some amount of weight of importance. So what I was trying to do was establish, like, where is the most important 50% marker here? Which of these trends right here satisfies that the best, right? So it's more than just me picking a trajectory and saying that's it. And then also you have to like take into consideration, and I know it's not easy, but who cares? It's probably not supposed to be easy, right? If it were easy, then everyone would be doing it and everyone would be making like tons of money, right? Of course it's not easy. Like, it shouldn't be. But then you also have to take into consideration the setup before and after, because this definitely has interaction back here with that same line. It also has interaction right here with that line as well. So there's a sense of like waveform entry and exits that's establishing these trajectories as well. So like it's establishing a support and then a resistance. So back in this area, this was the last one. This is essentially how I'm forming this whole thesis, is I'm looking at this point and I'm saying there is a trajectory from November 2020 that goes to essentially the next 4-year cycle. And you're like, well, why isn't it exactly November 2020 again? Good question, right? And that has to do with the fact of like the bars pattern. So on a daily chart, it's a specific number of bars. It's not always like November to November kind of thing. You might think that's the way it should play out, but that's not the way it works on the chart. It was a specific number of bars. Okay, so it had to be that way because it doesn't work if you just say 4 years and you use like calendar dates. It doesn't work that way. All right. Now, what's interesting about that November 20th, which was the last cycle, is that's actually when AMC basically hits its bottom, which I thought was really fascinating. I tried to do the same exact thing for AMC, and I wasn't able to accomplish the same results. So anyways, it's 201 bars, which is 1,407 days. And so if you take that measurement, it doesn't actually equal November 20th again. Was it an election year? Yes. So that's another thing that might kind of play into it. Except again, it's not really dependent on, exactly as an election year or whatever. So you take the 1,407, right, and you get October 7th, 2024. Okay? So the suggestion here is that on October 7th, 2024, you're going to intersect the trajectory that was established back in November of 2020. I would not be doing this if I thought that this was some like arbitrary, silly thing that I just kind of made up. Like, I only am doing it because I'm thoroughly convinced that what I found is real, that it's not accidental, and that it's absolutely going to follow through to some degree. Now, back here, it would have been easy in July, in July and August to think, you're crazy to think it's going to be up here on October 7th. So I did a series of estimations to the best of my knowledge, and I did the best I possibly could. And what I found made the most sense, again, maybe I'm slightly off, but what I found made the most sense is that the 50% marker is actually right here in November of 2022. Now that makes sense timing wise, that would be the halfway point. That's easy. But then in terms of like position, it's also like, well, if that's the case, if that's the halfway position, and it is, why didn't you pick something like a lower number, like 1185, use that trajectory, right? Because that's actually where it intersects. Well, that's true, but that's not really like where that support is. The support is actually higher up. So there's a couple possibilities. One's at 12, one's at 1280, right? So I had used a series of trajectories to help determine where I thought it might be. And anyways, I got to just trust at this point that I did the right thing. I can go back and probably see if I can figure out a different way to do it. But this is the way that I chose to do it. This is the one I ended up picking. I thought it had the most reliability because of the interactions right here around that 50%. This has the most interaction. Yes, it's always possible, like, if you're slightly off, that this could be significantly lower. I mean, frankly, if I were slightly off right here and this is lower, then October 7th, it's not up there. October 7th is actually, it's at 674, right? And if that's the case, then I did it wrong. I picked the wrong number, and I'll know that, hopefully. At that time, I'll be able to look back and say, yeah, I picked the wrong number. Anyways, I did some other things too, and I felt like this was one of the stronger dates that I came up with. So, again, certain reasons for that. It's not the only possible one. I think it's a bit challenging because it's such a new thing. Like, if this were the one, I mean, it also works pretty well. That's the 50% marker right there. So, I mean, either one, but you guys are like, well, then it looks like the lower one's going to get hit, Booksy. Yeah, so maybe we could add a second one here just to say it's there, but I don't want to use that. So this is the one I didn't pick, which is the lower one, and this is at, maybe this seems more likely now because you're like, well, look where it is. If it upthrusted again to that target, it would make sense. 677. Okay, so this target I had on my screen for a really long time was the high target. It wasn't until way later that I found that that target also seemed to match things like this, like those trajectories out and stuff like that. And again, it's like, well, we could probably find evidence that these both match, in some ways. Like this one also matches really well. They both do. So it's tricky, I don't think it's a one size fits all kind of shoe. All right. So what does that mean? Well, even if it's not 797, even if it ends up being 677, what that would tell me isn't that the whole thing needs to be thrown out. And that's really important. It would tell me that there's apparently a way to identify cycles on a 4-year basis. And even being $1 off is not a big deal to me. Because in the grand scheme of things, that's hugely significant. To have a 4-year cycle and to know like where you think it's going to be at a particular time and place is very, very important. So if it intersects 677, on October 7th, or if it intersects, and I kind of have it in a weird spot. It should be more exact. Hang on. It should be this blue line. I'm going to get rid of this one. $7.97. Okay, either one of those intersects on that date, and we've basically struck gold. Because both of those are suitable and can be replicated. And that means that in the next cycle, we can identify within the next couple of months, we'll be able to identify where it's going to be in 4 years. And that's really, really good. So when I say like, oh, I'm excited about this or that, about October 7th, I'm very excited about it. Like this is only going to come around every 4 years. And I don't think it's insignificant. Okay. So I think there's a decent chance it's one of these two targets. I picked the higher one, and I've been finding evidences for that ever since. But, just sitting here eyeballing it, if it hit the lower one, I wouldn't be like angry. And if it still hit this target, but it hit it later, like let's say it only comes up there, but it comes up there like November or something. Okay, is it that far off that I broke the bank? Wouldn't October 4th or 5th be more advantageous because you have a lot of options expiring on the 4th? Monday is the 7th. I don't have anything expiring on the 7th. I don't care about the options chain in this particular example. So I get where you're coming from, but that's not the basis for this. The basis for this is the 1407 days and the specific number of bars count. So when I look at this big picture, I'm not particularly concerned about the 7th versus the 4th either. It's a day off. I think that misses the point of what I'm doing. You're kind of like splitting hairs about something that doesn't really matter to me. Yeah, again, you're kind of making an argument I don't really care about. So I'm not trying to be a jerk, but it's like doesn't have any influence on what I'm saying. Like it makes no difference. The measurement measures out to Monday, not Friday. That's all there is to it. So I really could not care any less about options expiring. This was also a Monday, by the way. I'm not sure if they're all Mondays. Monday. Yeah, they're all Mondays. Monday. So you could have equally have picked a Friday, but they're all Mondays. So you've got Monday 4-year cycles, roughly 4 years. It's really not 4, it's a 1407, which technically is 201 bars. It's not way off from a 4-year cycle, but it's not a 4-year cycle. And I find it very interesting because it works so perfectly. But it is always a Monday. We got a double bottom on WTO, or did you redraw the likely scenarios for this week already? I haven't redrawn anything. I'm just kind of watching it. When I look at this big picture, what it looks like to me is what I would call like a cross. Like it crossed up, made a wave locally, made a wave top here, which makes sense if you look at the direction here. Because this wave move should have been equivalent to this drop earlier, and it is. The measurement of this move comes out to the top. It hits where it needs to hit. I did a series of parallels coming down, which now I've turned into like a fib channel. It rejected there and it came low. In theory, does that make or break anything? No. But you could use that as a way of understanding like maybe where that floor is as a flexible kind of bottom. I think it's a pretty decent one. So I do think that there's a strong enough consistency here with these parallels that you're seeing it play out. So like I'm watching this right here and I'm seeing like an intersection of multiple creeks coming back down to 5. So yeah, basically a double bottom, potentially even dipping slightly below 5. The main reason for that is because 58 broke down, 58 cents. So when you lose 58 cents, that breakdown seems pretty inevitable because it lost the floor here. That it's just a range change, so it just shifted back to being resistance and it dropped back low. So then this builds out support where it's going to build out support. On the widening began back here at roughly 50 cents. So you would return back to that value if there's a breakdown on that widening. So like I think it's pretty straightforward. It's a throwback. It may not be as bad as it looks. It looks really bad. But the reason I think that is because it's already come back down to check that creek. It's kind of bouncing out. Volume shriveled up quite a bit on the drop. And I don't think it's going to go significantly lower. If it did drop maybe 48 cents just to test. I got to say, though, after that point, it does look really bad. So, like, it's not a positive outcome, right? If you continue to slide, you're talking dropping through that creek. You don't really have much else here. You'd end up coming really low, like to the 30s. So, fingers crossed we don't do that. And I haven't really seen much else at this point. I haven't looked at RSI at all. Yeah, I mean, to me, it just looks like it crossed up and then kind of reversed, came back down. Sort of like a head fake. But I think it was just a reactive move to check some things. Like, look at the 30-minute, that cross-up's real clean, and it just crossed back down. And all that happened in like one day. This is pretty normal. The market doesn't always make big moves and then just keep going. Usually you get those pullbacks, so. The 1 hour never jumped, so it got pretty close to crossing back low, but it never jumped over the top. It never went back through 0 on MACD. I think that's pretty important on the big picture. So when I look at this, I'm not going to overthink it. We got this advancement. It got overbought really fast on the 1 hour, meaning it accelerated quickly with the volume increase. Came back down through there. RSI is still within its trend. For the most part, it's kind of just coasting upward. there's not much to say just yet with the throwback. But yeah, if this crosses down, it would happen right at 50. I think you're going to see a pretty nasty drop. So it changes the game on this quite a bit. I think it's a busted play, unfortunately. If it drops significantly below maybe 48 cents at the lowest, it's kind of like the dip I could see being healthy. Because right now, what this looks like is an auto reaction and a phase B top. And it may seem really dramatic to some folks, but to me, this is very normal because we see this kind of stuff on AMC. The only thing I'm kind of concerned about with this is, again, maybe this. I don't think it's a sign of weakness, but we'll see. So I don't know. We're just not there yet. I would say if you're in this trade, you didn't exit up here. It looked really good, and you're like really annoyed right now. I would just say, like, look, man, if you got in low in the 50s, you're probably fine. If you got in higher, you definitely need to consider what happens if it drops through 50s. I think that would be really important for a trading plan. And specifically, like, roughly around 48, right when it shifts to the 48s. You can use some things like the MACD cross potential. It didn't come above 0 on the hourly, but it looks like it might cross down. You know, it's already had some cross downs on some other time frames. You could use that. I'm using that in combination with this creek right here to see if it's going to hold. I don't think there's any danger if it holds here. Even if it did have like another push and a drop, I think it potentially could just leave again. So I think it's a difficult play. It was always going to be a difficult play. It had to do certain things to make the moves to the upside. Trajectory-wise, I'm not really seeing any evidence that you would necessarily wave out any faster than you came in. So if this is rounding a corner and does begin to move back up, in theory, like, it doesn't necessarily even have to get to like a high point till not even Friday, but maybe even like beyond that. Just kind of eyeballing it. It could be a while, you know. A couple weeks. So really the move in isn't that fast. It's kind of slow. So the move out wouldn't necessarily be ripping super fast. We talked about this as a pattern that I believe in, and I still believe in it. This isn't a dead play in my opinion. So I disagree that it's necessarily going to go super low. But I think that you have to kind of just read it as it is, and you have to have a place where you say, yeah, I'm not going to kind of let it sink anymore with my money in it. Does that make sense? That's just a choice that you have to make at some point. So this to me was the most likely area for the floor. If it can't continue after this, and by the way, it still broke out. That's what I'm trying to say. It still broke out of its creek, its wedge, whatever you want to call it. Like, it's still out. There's no question about that. It's just coasting right along it right now. So to think that the breakout has somehow been reversed would not be true. That's not actually happened. It's just that it didn't do any kind of proper checks when it broke, so we're coming like way back down. Well, I can't speak about its, you know. Can't speak about whether or not it's a sham or not. I saw it as a potential good technical trade. If you traded off the bottom and got in and out, you probably made like 35%. Beyond that, probably not been the best trade so far. So I still think there's a strong potential here for upside. And I'm going to stick with that for now. Even in the interest of just looking at this from, yeah, I get you. Yin Hua, I don't think you're necessarily wrong. Yeah, I still think even in light of a 50% retracement, it's still $1.32 off that top. I think there's a significance in those levels and the fact that we've got gaps galore down to or up to that point. This is not meant to be a long-term trade where you get, oh, I'm investing in this because it's an early startup or this or that or the other. This is purely a technical swing trade. Like, I'm treating it like a penny stock because it's a penny stock. And I definitely have not said otherwise. So if you guys are investing in it, it's high risk. If you're not investing in it, then that's fine. Like, it's totally cool. It's high risk. I think it's got potential to come back up to, $1.30, $1.40. And I was just saying, like, if you're looking at the trajectories, it doesn't necessarily even happen until basically the end or the beginning of October. So that's sort of what we were seeing in these other trajectories too, these pivots. That you may have those moves, but they could be very lagging, I should say. Yeah, there's some interesting things going on with this, for sure. And you guys are like, well, it looks like it's just dying. Yep. YGE, yeah. Well, yeah, I don't know. $2008 was a long time ago. If you look at China as it is now versus then, I think it's a pretty good debate. This 4-hour looks really good to me on the RSI thus far. It's crossed its moving average. Unfortunately, like for penny stocks and junk, kind of have to resort to like simplicity, I guess. That is a good trick. Interesting. I had a really similar marker. It's just looking at something real quick. Well, like I said, high risk play. I'm not super worried about it. It is what it is. If you guys are worried about it, you probably shouldn't be in it. You know, if it's like that, if it's that stressful, I wouldn't worry about it. I wouldn't even be playing it. Yeah. I'm still of the opinion that we're very likely going to get back to 130. Just again, purely technical, but I can't control things like a company going bankrupt or delisting or something like that. You can't, there's nothing you can do about that. Maybe you can see it coming, maybe you can't, but I don't know. I had someone come on and tell me MPW was a sham like a few months ago, and they were saying the same thing, that it was like a dead play and it wasn't going to do well, and then it's way up. So like I'm not saying like you're wrong, but I take those things with a grain of salt, like in my own understanding of the movement. So like folks said to me it was dead back here and it was going to keep going down when it was like 463, you know. I had the same kind of comments all throughout this area. It's like sometimes it just takes longer to see something happen. So I'm not a big fan of the I like hearing what people have to say, but I think I have to take those kind of comments with a grain of salt. You know? I just do. And maybe it won't work out. You know, where MPW did work out doesn't mean that something else does. Just because I'm, you know, trading it, that doesn't mean it has to. So, yeah. All right. All right, everything looks good though. Let's go ahead and wrap it up. I'm gonna head out for the day. I got other stuff I gotta get done today. Lots to do. So I'll see you guys when I see ya. I will not be on tomorrow, but I will be on back on Wednesday. Y'all have a good one. I'll talk to you later.